Hello friends, in this video we'll be seeing if gold is a good investment or not in India in 2021. So initially if you consider the contribution of gold to country GDP, it is 7.5%, which is pretty significant, and there are about 60 lakh people working in this gold sector. And people, the work which they do are usually gold mining, they do it, gold production, they do it, then selling gold jewelries, they do it, and gold loan companies, they do it. All those people, they'll be coming in the 60 lakh uh, people. Next is illegal gold shipment, is covering about 17.7% of the country's demands. So we can see that the illegal gold smuggling is a very big deal in India, and the main reason is because the gold tax is 15.5 percentage. If you are bringing gold from Dubai or from Middle East or something like that, you have to pay 15.5 percentage just to bring it to India. So this is a very costly number. So this is the reason why most of the gold is being smuggled to India, and it's becoming a very profitable business. So I'll give you three reasons why you have to invest in gold. The main reason is that by day before yesterday, on January 14th, the Nifty has touched a new high of 40 price per earning ratio. 40 price per earning ratio is so high, and the highest which Nifty has ever reached is about 30. Like about 29 it has reached, even 30 is too high, and now right now it's 40 due to hyperinflation, because a lot of foreigners are dumping their money on India. That's why it's so high right now. And I think like when the bubble burst for share market, most of the people will start investing in gold. And if we invest now itself, if we take the opportunity to invest now, we'll get more gains than they get. And one more thing is that a lot of countries such as China and Russia, they are like mass purchasing gold. Since the US dollar is weakening, if you see in the past, gold, the dollar, US dollar is backed by gold. But right now it's just a fiat currency, and it is not backed by anything. And a lot of people are trusting US dollar for trading purposes. But now what is happening is this US dollar is so weak, and people are actually losing trust in this US dollar. So what they are doing is to have a better hedge, they are just buying this gold and even silver, and they are buying and keeping. And one more hedge which is coming late, which is coming recently, is cryptocurrencies. Lot of people are buying Ethereum and Bitcoin. If you see, like it has just in this 4 or 5 months, it has reached about 400 percentage gains. But it is so volatile. One day, if you are investing 100 rupees, in just another day, it is becoming 125. Or even if it's lost, it is just we are losing like 50% of the value in one day. So it is like too volatile, and people are like working very hard to earn money, so they don't want to risk it in such cryptocurrencies and all that. So just to be safe, we have to use a proven hedge, which is gold and silver. Even silver is becoming a very good hedge as of now. So how much weightage should gold be in portfolio? um like personally, I will always have a 50% in stocks and 50% in bonds. Because personally I'm a Graham student, and like I just follow value investing in whatever I do. So I follow 50% stock. Also, I'll be using only very undervalued stocks I buy and keep, and 50% I'll just buy as bonds. And now what I'm planning to do is I'm planning to invest even gold in my portfolio. So the minimum gold which you have, it has to be in portfolio is 3%, and maximum should be 10%. That means like out of every 1 lakh you invest, at least try to buy and keep 1 or 2 grams of gold. Okay. Now we will see the prices, like how is the gold getting affected. First thing is US dollar price. As with increase in the US dollar price, the gold price directly decreases. I'll just show you an example. Okay, if you see the diagrams, like if a gold price decreases, the dollar will increase, and if the dollar increase, gold will decrease. So it has basically inverse relation. That is why it's called as a hedge. Okay. And Nifty, I'll just show you the value of Nifty of the past. So if you see the Nifty values here, we are considering from 1999. The highest it has reached was 28.47, 28, 29. So around, if the value of the Nifty P by E ratio rises to 28 or 29, it is already a high time that we are out of stocks. That, like, if it rises above 30, we have to be very careful because the bubble might burst anytime. And see, if it bursts within a few trading sessions, like about most of the money, it will be deleted. Like if you are investing like 5,000 rupees or even 10,000, like within like few days, 5 days, you will be losing like 20% of whatever you have invested in. So this is why they are saying, like, when it has reached 40 right now, this was on 15th it has reached 39.34, but on 14th it was 40.3. So since this is a very risky time, what I feel is like putting 5% of the portfolio in gold is a very good deal. So we have already seen this, that US dollar price is inversely proportional to our gold price. Then next is your treasury dividend yields. These are the bond which government releases, and for example, they are paying like 4.5 percent coupon rate per year. If they are increasing into, for example, like 5%, then like gold will start decreasing because people will start just buying government bonds instead of gold. Then in India, this especially monsoon seasons also affect gold because these are the time when the farmer will get good crops. The crops, they will have a good harvest, and after their harvest, what they do is they just think, where do you spend the money which you profit? And the best source is to put it on gold. So the gold price, mainly in the rural, due to the rural people buying, it will definitely increase. Then the last is global crisis or calamities such as COVID-19, US-China trade war, US-Iraq war. All these things also affect our gold price. Now we'll see, like, how do I buy gold? Before that, I'll just show you the how the gold has increased in the past. So this is the gold price chart. Let us go and check 1 year or 3 years, how it has done past 3 years. So basically, like before a few years, like till 2019 and all, it was just around 1,000 euros. And it is coming euros because I'm in Europe right now. That's why it's coming like this. And if you see like Indian price, it will be around 20,000, I think. So initially it was like only 1,000 euros. But if you see right now, the current price is 1,500 euros. And what people are telling us in the future, definitely it will be increasing to 2,500 euros or something. Um, So, like right now, we'll see the COVID situation first. The COVID happened around here, somewhere around here. So, like the price was around 1,369, and it has rise to like, even right now, if you see it is like 1,500. That is basically like 200 euro increase. So the prices are getting high, and if you see Indian price, the Indian price has increased to about 50,000 rupees, and this year it has decreased to 48,000 because these vaccines are coming, right? Vaccine is actually like, when people are getting more vaccinated, the gold price will of course decrease because there is more stability. And Joe Biden is coming to position as president, even that will decrease the gold price. So there are a lot of factors which will affect the gold price, which I'll show here. These three will be the main events which we have to watch out for before buying gold. First thing is Joe Biden inauguration and the impeachment of Donald Trump. Both these things will be happening this week, from 17th of January to 24th of January. We have to look at this news, and if the gold prices are really falling, then we have to use these opportunities to buy more gold. And COVID-19 vaccinations. And even this will have an inverse relation to our gold as people are getting more vaccinated, and when we get lot of immunity, then of course the gold price will decrease to its original value. But if there is more confusion in the market, if there is like a bubble burst due to share market, and if the dollar is like weakening too much, then gold price will definitely increase. Now we will see what are the methods to buy gold. First is physical gold. Physical gold, there are a lot of companies in India like Kalyan Jewellers, PC Jewellers. There are a lot of general companies. You can just buy gold there. And there are three type of gold, physical gold you can buy. One is called a jewelry, other is coin, another is ingot. The thing is like companies like Muthoot Finance and all, they just give coins and ingots for sale, but the problem is you can't sell it back to them, and you have to go to some other gold loaning NBFC to sell it. So what is recommended is like you can go for jewelry, because like if you are going to invest in physical gold, at least you can use that gold, right? Uh, and physical gold is actually very famous in India. They just use to show off their wealth, and so you are just getting the experience, also experience of living in gold, having gold. So so even the value it is decreasing due to exposure to air. At least you are using it right. So I think like buying jewelry is okay choice, but if you are going to an investment perspective where you have to earn lot of asset, then this is not a good choice, because this will definitely become a liability, because there is a lot of risk in keeping gold jewelries, because it has a high chance of being theft. And we see in news already, like at least once in a month we are seeing that some theft is happening in some house, so it is very risky. So that is what I have written here, like allows you to present yourself so well, because like in all the marriages and all, even the bride, she used to be very good, right? That is because of the gold. They'll wear very good gold, and everyone in the marriage house, everyone will like be very grand because they wear gold. That is the advantage. And one more thing is gold loan, you can easily get it without even showing the pan card, or even without showing the income proof. You can get a gold against a loan against gold very easily. If you are keeping for like 1 lakh, if you go to SBI or something, even 90% of the for 90% of the price you can get a loan. 90% loan also you can get. And if you are going to Muthoot Finance, Manappuram Finance, you can get 75% gold loan. But this is the liability. It has a high chance of being theft. And one more thing, which is very famous right now, and like lot of crores of people are buying actually shares in this thing, or gold ETF and gold bees. Gold ETF in India, it is called as gold share. I'll just show it. Gold share ETF price. So this is the thing. UTI gold exchange traded funds is there. I'll just show you the price. So if you see the price, it is like 4475, and the actual price of the gold right now is around 4800 rupees. So there'll be discrepancies. But the thing is, it will closely follow gold. If the gold price increases in real time, even this will increase, because 99% of the gold they hold, because this ETF holds 99% gold and 1% in some other gold related share. So the advantage is it's very easy to liquidate, and if you are using gold bees, then you can invest in gold as little as 43 rupees. I'll just show you that also. Gold bees ETF, and both these ETF are there in Zerodha and all. So you can just put gold bees and you can just get the value. I'll just show you for Nippon. Nippon Gold ETF is the most famous one right now, and the current price is 43.1167. So this is near 43. So like if you can't afford like 5,000 rupees to buy a gram of gold, and like if you but you want to invest 500 or something, then you can just use these gold bees, because at the end of the day, if you are going to invest a lot in gold, and if you have only a very small amount to spare, then you can just slowly keep buying this. Okay. But the disadvantage is these are the form of unallocated gold. Like even if the company like completely this ETF completely stops, okay, then like you can't get any gold because you are not owning any of their gold. It is just a trust. It is just a trust that they have a lot of gold and we are buying a part of it. Okay. And this ETF has a lot of risk right now also, because what they do is they keep money in the bank, the gold whatever they have, they just lend it to someone else. Okay, so gold will not actually be there in bank, but we will believe that they are having actually gold is stored in the bank and we are buying it, but this is not the case. This is for ETF is basically a win-win situation for most of the banks. So if you want to liquidate, like if you want short-term trades, like I want to earn like 6% in 6 months or 1 year, then I think gold ETF is a very good choice, because like whenever you get very good chance to sell, like for example gold is increasing by 20% and you want to sell it, the next moment you can sell it, and it's very easy to liquidate. It's like only you will be giving a sell order number of shares, that's it, will be sold. And even like the tax which they take, it will be very less only. For if you are buying physical gold, basically if you are paying for all those 15.5% GST, then working we have to pay for the people who work on the gold too to make a good ornaments. So those will be very costly, and these remove all those barriers. And one more best form of buying gold is sovereign gold bond. These are issued by government. Bond, it's a kind of debt document only. So um, they'll tell that you can invest between 1 gram to 4 kilo of gold you can buy using a sovereign gold bond, and it is issued by RBI. And you can just show sovereign bond gold bond for getting loan also. And the main advantage is you are getting the like price appreciation of gold also. You are getting a 2.5% interest per year also. So this is basically a win-win situation. But the disadvantage is you need to be if you are investing, for example, even like 5 lakh in that sovereign gold bond, then you can't take that 5 lakh in the next 5 years, because that is the lock-in period, and only after 5 years you can just sell it. But there are other ways to sell it, because you can sell this in share market also. But the thing is, like if you are not going for a long run, if you just want to trade, then sovereign gold bond you can't do in it. You have to do it in ETF. But if you are an investor, if you are planning to keep it for like 5 or 10 years, if you want to be invested, then definitely I recommend going in sovereign gold bond. Last thing is gold mining or gold stocks, and this is the most hottest thing right now. If you see, even Warren Buffett, he has invested in Barrick Gold. He has invested a lot of stake, right, in Barrick Gold. And there are lot of gold mining companies which are upcoming right now, and it is having like 2x the profit of whatever the gold gives. If gold is giving 26 percentage profit per year, it is giving even more, like even double than that. So everyone, so gold mining shares are very attractive right now, but the problem is in Nifty or BSE, there are no gold mining stocks actually. So what we have to do is we have to buy gold loan stocks. Like the major companies which give gold loan stocks are Manappuram and Muthoot. And even if you see Titan, they are also having Tanishq and all under them. So even they will have a lot of gold as their asset. And as the price of gold increases, even their asset value will increase. But the disadvantage is since the P is at 40, the bubble, everyone are talking, right? The bubble might burst soon, burst soon. So like even if you buy it, and if there is some other problem with the company's management or the bubble has bursted, you will lose a lot of money. So just to be safe, if you are going for the long term, I just prefer to buy sovereign gold bond. And if you are really going for a really short term, then more than ETF, I think you can go for gold loan stocks. Provided like, but if you're going for gold loan stock, you have to see how well the company does, like what are its competitors, what are the products they sell, how are its cash flow, how is its income statement, how is its balance sheet. Then there'll be a lot of valuations we do, right? Current ratio, PE, EPS, everything we have to check before investing in these. So how much return we can expect for this year 2021? And like what many people are expecting us this year, it's going to give a profit of 11 percentage. And we know that the consumer price index is at 4.5 percentage inflation. So if you are investing in gold, we can definitely beat the inflation with very less risk. So definitely it's worth investing in, but it depends on when you start investing. You have to read the news, and like you have to buy in all the dips, and like it all depends on you. You have to choose when, which is the best time to get in gold, and you have to get in that. Okay. And the value I'm telling was 11%. I got it from Quorum. Because gold is a it doesn't create any wealth, right? Like for example, if you are investing in a company, they are taking your money and they are making profit with it. Gold is not like that. Gold is just used as hedge. So if dollar price increase, this will decrease. This is decreasing, that will increase. But the thing is, there is something called as World Gold Council, and they are telling that gold actually has some value, and they're saying they are having a value depending on the supply and demand, and they are also having a lot of things like delayed recovery, financial crisis, how all these, they are saying all these things will affect gold in a way, and they are quantifying it like how much it will affect the gold price. And like after forecasting my supply and demand and calculating the implied return and INR, we can see that gold return for 2021, it was like we can expect even 20.5 of profit, it seems, but the error range is 16.9 to 24.1 percentage. So like what most of them are talking, since the supply for gold is very less. For example, in India there is no supply for gold only, but the demand is lot. So definitely I believe like coming year it will definitely, the gold price will increase. But I'm not a SEBI registered advisor, so like just take my word with a grain of salt, and please do a complete research before you invest in anything. So thank you, and if you have thanks for watching my video. If you have any doubt, you can put it in comments. Thank you guys, bye.